Welcome to another educational video. This is Abdullah. Today we're going to discuss a very important topic, which is what to consider when investing in a guaranteed return property. What is a guaranteed return property? It is a property that investors invest in, and this property generates cash flow from day one. Basically, developers guarantee a tenant for your unit from day one, and there's no need to wait until you lease it out. It is already managed by the developer himself. This strategy is usually used by developers to attract investors into buying their properties, because investors usually are very attracted to properties that guarantee them immediate and easy cash flow, ROI basically. Although this seems to be too good to be true, it is very important to consider very important factors before taking such a decision. Point number one, is the unit you're purchasing selling at the current market price? Besides the fact that you're getting immediate attractive income right away, it is very important also to realize that you're buying at the right price. Usually projects like that sell higher than the market price, and investors usually fall for that trap because they realize after a period of time that the income they're making in the first couple of years is just the amount of extra money they invested on that property. The second point is that it is extremely important for the investor to calculate carefully all the financial figures with regards to the investment. It is very important to calculate all the expenses such as service charges on the unit, management fees, and other repair maintenance expenses. This is because developers usually put the ROI higher than it usually is. They neglect the other expenses and makes it more attractive to investors. So be careful, calculate these amounts very well, and you can go on with your decision. The third point is that it is very crucial to know your exit strategy. It is very important to have a calculation or at least an estimation of what would be your resale value, what would be the future value of your unit. Is it going to appreciate? Is it going to depreciate? And you can do that and you can know that by considering the current purchase price compared to the current market price. Also, you have to pay a lot of attention to the current market supply and the future market supply. The fourth and final point is that the opportunity cost for such an investment can be high. This is because sometimes a secondary market investment can guarantee you a higher return. Investors usually look at the ROI and the guaranteed return by developers as something very attractive, and they give a blind eye to the current rates and the current returns that a secondary market can give an investor. Developers usually lease your unit when you buy it at a lower rate than the current secondary market. So it's very important to compare both and make the right decision. To conclude, yes, guaranteed return properties are attractive investment, yet a smart investor should do their research and comparisons and financials before taking such a decision. They can also take the right real estate consultation before taking their decision. Thank you for listening. Hope this was useful. For any further information, please do not hesitate in contacting us at the Pearl Gates. Thank you very much.